Welcome back to our last webinar for the year, which appropriately is going to start looking ahead towards next year. But as always, we'll give it a minute for people to trickle in. For those who are already here, just a little reminder, last month we did an election reaction event, and we have had some issues with people having our emails or our invites go to spam. So obviously, if you're on this event, you probably got our email invite, so you probably were getting them last month too. But just in case, if you just saw this on our website or through some other means, and you're like, "Yeah, you guys haven't emailed me in a while," no, I promise you, we have been. It's just they've been going to spam for some people. It has something to do with Gmail or Outlook or Hotmail updating their settings, and it sounds like there's a lot of people who are dealing with this, so not to get really technical. But anyway, if you've been, you guys haven't talked to me very much lately, that's why. It's going to spam. We're not ignoring you. So last month we did an election reaction, and a lot of people told me doing it on the Thursday after election day wasn't smart because we wouldn't even know the winner by then, but obviously we did. And coming up next month, and I don't believe we have a date set on this yet, is an RMD webinar. So all information, whether you're currently taking RMDs or you're curious about what you'll have to do when you have to take RMDs, you'll see the invites for that and everything. But that'll be coming up in January, since once the year rolls over, we can start to know those balances. So anyway, today is all about looking forward to next year while also looking back at last year. And I think it's really appropriate that we're doing this the week after Thanksgiving. I hope you all had a wonderful Thanksgiving, by the way. Um, and we're doing it the week after Thanksgiving because a lot of this is about taking stock of where you're at and about some of the things, hopefully, that we have to be thankful for. So I think it's fitting that we're doing this. But before I get into the details today, and let me move forward again, my name is Anthony Gerbi. I think most of you know me. If you don't, I've been an advisor with Stein Financial Group for 10 years now. And I do these presentations pretty much every month on different topics throughout the year. So welcome if you're a newcomer. Um, but let's start here, because one of the things we just had Thanksgiving, and I'll give you one of my classic lines that, and I've said this before, so I apologize for those who have heard this before. But since we just got through Thanksgiving, I've been married for a few years now. I already have one child. There's another one on the way. So I've gotten through most of my wife's family in terms of, hey, how are you? Who are you? What do you do? Those sorts of conversations. But my example that I always give when people ask me what I do, and I say a financial advisor, and they, kind of, okay, cool, and they don't really know where to go from there. I think there's a lot of hesitation. What is that? What do you do? And I always used to say to people, well, I help people make good decisions, especially when it comes to their money. And what I found was it actually resonates better. They get it more if I say it the other way, which is I help people avoid bad decisions, right? And so an agenda like this, where we're going to go through a checklist and we're going to hit some very important factual information, that is all well and good, in my opinion. But that's not what a financial advisor does. You could Google for some of the statistics that I'm going to lay out for you. Yes, we have them organized neatly. And yes, you've got me presenting them to you, so hopefully they click a little bit better. But you could find this stuff. You don't need me to find out what tax brackets are for next year. However, where I come in, and this is what I think I do as a financial advisor, is on each individual point that we are going to go through, I have one item that I think is practical that all of you could do to get better prepared for next year or take into account things that have changed in the past year. And the reason, it's a subtle distinction, but I'm going on about it at the beginning specifically for a reason. I have a huge sample size of people I work with. I work with hundreds of retirees. Okay. I've seen a very diverse array of people and situations that have come through into my office and given me totally different perspectives on what retirement can look like. And I think what a financial advisor can do is take these factual bullet points that we're going to go through and bring them down from the 30,000 foot view to street level, where I can tell you, hey, this is what this bullet point says, but here's how I think it might affect you. And I'll do this throughout the day, so you don't have to just take my word for it. I will go through this with you. But that's what my goal for today is. It's to take these concepts that any good financial advisor would hit on with all of their clients, right? But to take them from that esoteric, factual level and bring them down into the, well, what does this actually mean for me, Anthony? I talk all the time with the team, with Jeff, about conferences I've gone to and the topics around the, lunch and conferences with other advisors. And the topics around the lunch table when we break for lunch are always a variation of, oh, well, this investment's doing really well right now. And here's this big business that I was able to start working with. And wow, what a great job I'm doing for them. And the conversation is almost never about, here was a big impact I made for somebody, or I can't believe how lucky I am to be able to see this person go from really uncertain about retiring to they've been retired for 10 years and they don't even call me anymore. I have to call them to get them on the phone. That's what I think is important. The investments, the money, of course, that's important. We want to do the right thing by everybody and make everything run as well as possible. But I want you to experience life in a way that works for you. And these items today, I'm going to try to, again, boil down to the point where you can actually think, ooh, I could actually do that, Anthony, or that, ooh, I hadn't thought of it that way before. That is my goal. So to that end, we do have a companion document to this. If you're somebody who likes to see sort of bullet points and everything laid out nicely, Aaron can link that in the chat and to download it. And please, if you have any trouble downloading it, just mention in the chat, oops, it's not working for me. We'll just send it to you in an email. This whole presentation, by the way, is going to be up on YouTube as well. So it will, you'll be able to go back and look at the factual information if that's, again, how your brain works. But my goal today is going to be, and I'll move out of the way so you can actually read these, all the stuff that's in bullet points and under headers. I'm not going to read that as much. What I'm going to focus on is each slide we're going to go through has a little shaded box down here. And the shaded box is meant to be, here's what you could actually do to better set yourself up for 2025. So this is our first topic. Let's use this as the example and dive into it here. Review life changes. This is the Happy Thanksgiving, what are we thankful for slide, right? Think back to last year. What's changed? And if you're a person who likes to write this stuff down, great. I would encourage you to have a pen. Oh, you can't see it because my background's obscuring it. I am holding a pen in my hand. Have a pen and a piece of paper out in front of you and write this stuff down. Again, you'll be able to go back and watch it later, or you can look at that checklist that we've got. So if you don't want to take notes, that's okay. I'm not going to quiz you on this stuff. But look back at your last year, and first off, think about the things you want to celebrate. Did you get a new job if you're still working? Did one of your kids get married? Did you retire? Did you move to a new phase of retirement? What it could be big or small. Think back to what those things were. And then also, did that change anything for you? Right? That's the subtext here. Did that change in life? Oh, I moved to a new place. So now I actually, my expenses change. We'll get into all the minutia later. But all that stuff adds up to stuff that I really do need to know about. Not the little minutia things. I mean, I'd love to know if your kids are getting married or if something great happened. I mean, just share that with me on a human level. But especially on the life changes thing, did you move to a new state? All right, that has big financial implications sometimes. So these are things that I do want to know about because they can make a difference for you. So to start with, just think back. What changed last year? What changed, hopefully, for the better? Now, some of us will have things that change for the worse, and that's life. But it's important to take stock of those things because that's what adds up to a retirement. Again, I've told you, I see people retire every day. I work with hundreds of people who have retired successfully, and that looks different for them than it will for you. But thinking about what's happened in your life is what defines success. And I don't lose sight of that. Don't just think, well, Anthony's the dollars and cents guy. So I need to just think about, well, the market was pretty good last year, which it was. So, hey, good year last year, right? No, what happened? What did you do in your life? What made an impact? That's what your retirement's really about. Either your present retirement or your future retirement if you're not yet retired. All right. So everybody's favorite topic, budgets. All right. Now, before I'm not going to read anything on this slide other than that shaded box in just a second, but I want to give you full disclosure. I do not have a written budget in my household. There is not a spreadsheet on my computer. There is not a ledger that my wife and I dig into every month of, okay, well, here's how much we can afford to spend on this, that, and the other. Okay. And that doesn't mean it's wrong if you are a person who does that. That's great, actually. Actually, when you come to see me, it makes my job easier, right? But I'm totally willing to admit that that's not me, and that's not the average person in my experience. Most of us kind of keep a mental track in our heads, right? About, okay, I'm doing okay. My bank account's staying pretty steady every month, so I'm obviously not dipping into savings every month. And then if that's going good, I'm good. But think about the things in your life, and I have these things too, that not are wasteful, because I think that's a bad way to put it, but are things that you can think back on and say, okay, if I was going to tighten up a little bit, not in terms of spending, but just in terms of things I didn't actually really need, but it just happened because I wasn't paying attention. What are those things? I mean, our example here is did you get takeout a lot? Now, if you're somebody who likes takeout, then that's important to you, and that's what you should be spending your money on. But the key here is to find those things that are important to you and focus on those. Try to eliminate the rest of the noise that can happen, and I see it too in our spending of, well, this thing came up and it was just one thing, and it wasn't really it wasn't really worth it at the end of the day anyway, but I did it. And when we're thinking about budgets, when we're thinking about longevity, you just want to think about those things on the margins that, ooh, okay, if I scraped off a little bit there, would that make a big difference over here? And by the way, that's a question for me, okay? Because some of you may not have to cut back on anything. In fact, I often have the opposite problem with people where I'm saying, spend a little more money here. You've got it, spend it. Don't be afraid to spend it. So you could be anywhere on that spectrum, but figuring out where you're at, it doesn't mean you have to do a big checklist budget with 85 items on it. And here's my down to the penny monthly inflows, outflows, blah, blah, blah. You don't all have to turn into accountants, but try to get a sense of what you're bringing in every month and what you're spending every month. Just a sense can be a round number, because that does really help me. That's one of the things, that's it. For those of you who have met with me recently, that's one of the things I ask you right away. How's your cash flow doing? Are you making it every month? Everything going okay? And that's a very, easy way to ease into this conversation without me just pulling out a piece of paper and saying, well, let's go over your budget here. Because I think that's a little too aggressive for most people. It would be for me. So again, budgets are kind of you probably had a reaction to it as soon as I said the word, ooh, not for me, or ooh, I love budgets. Um, and that's okay. Either way is okay, but we still need to get a sense of what our cash flow looks like. That's something I can help you do, by the way. So if you're, wow, I've never thought about that really, Anthony. We're doing fine, I think. Yeah, have me look at it. I'll tell you what I need to be able to figure that out. Just get in touch with us. And, it really can be a quick exercise that can give you a lot of information. Okay. We are going to get on to, it's not just all going to be touchy-feely stuff. I promise there's going to be some hard numbers here too for those like you who, or like me, excuse me, who itch. Give me some facts. Give me some facts. So, tax planning. The number one thing that I think you should all start doing is right around this time of year, November, December, try to get a sense of where your income is for the year. Okay. And this, again, is something I can help you with, but I try to do this for myself. Try to get a sense of a round number of where your income is for the year, because that's going to tell us a bunch of different things. Okay. That's going to tell us where we might be in our tax bracket for 2024, which means either, ooh, if we could save a little bit more money, we could drop down our last dollar into a lower bracket and pay less. Or if we've got a big gap until we were going to hit the next top bracket, maybe we do some tax moves and actually pay some taxes now while you're in a lower bracket. Both of those things are possible. I do those all the time with people. And that's something we should be focusing on. A practical piece of advice that I think would really make a difference for people who don't already do this Get a folder, a manila folder. Go to Walmart, go to wherever. Manila folder doesn't have to be fancy, or a binder or a spiral notebook, whatever's going to hold it, the best way for you, whatever works best in your head. And label it 2024 taxes. All right. Year's not even over yet, but label it 2024. That's where all of your paper documentation is going to live. That's where we're going to get the information to make that estimate about 2024 tax year. Okay. You can put, if you're still working, a pay stub. If you do any donations, that's where those receipts or confirmations can go. And put it somewhere secure, but not necessarily somewhere that's behind a lock and key. And the problem with that is if something were to happen to you, or if you just happen to lose the key, it can be hard to get at that stuff. So put it someplace secure, hidden, but not, safety deposit box level security. Okay. And obviously you want to be organized, and obviously you want to project income for the future. But just looking back at the past year, while there's still a month to go, can really lead to some pretty glaring conclusions. Like, I've had people who have walked in and I've looked at their income and said, oh, we should be doing Roth conversions this year. You're going to save 10% on every dollar we convert right now. Well, hey, if we're talking about thousands of dollars, that's going to add up quickly, especially if we can do it year after year. So that's definitely something we need to be talking about together. Again, none of this is stuff you need to do on your own. Okay. If you're comfortable with it, by all means, go for it. I'm trying to give you the tools to know what questions to ask. But even just knowing, Anthony, you said this about tax planning. Can you walk me through that a little bit more? Absolutely. Then I'll be able to tailor it directly to you as well. So, what are the changes in 2025? Okay. These are hard numbers. I get it, but I'm going to boil it down into the real world for a second. So, first off, everyone on this call gets a standard deduction from their taxes. And let me just take a moment and explain what that is. I'm not an accountant, so disclaimer, but a standard deduction is a deduction that everybody gets regardless of what your activity was that year. So a lot of people think of our deductions, right? Charitable donations are deductions. And what that is you take your income for the year, you subtract out the deductions, and then that's what you're actually taxed on. Well, one of the things that change, I know some of this is review for some of you, so bear with me because not everybody's heard this. In 2017, the standard deduction, meaning the one that everybody gets, was doubled. What did that do? Well, it actually made it so that 90+% of people can't beat the standard deduction, can't beat it. Why did I use the word beat there? Because you still have the option to itemize your deductions, work expenses, if you're still working, charitable donations, lots of other things obviously can be deductions. That's why you save all those receipts. But you only do that, you only take that added up number if it's greater than the standard deduction, because the bigger the number is, the more you get to deduct from your taxes, right? That's why you want a big deduction, because the bigger the deduction, the bigger the subtraction off of your income is. Well, what's happened is that 90+% of people, in fact, it's probably well over 90%, aren't itemizing their deductions anymore. You might still be handing your receipts into your accountant, but they're doing the math and they're saying, hey, you're a married couple. You get $30,000 just for waking up in the morning from the federal government as a deduction. You don't need to send me these receipts anymore because you can't beat that. You're not getting charitable donations or other deductions of more than $30,000. One, that has made taxes a lot easier to do, but it has also made these deductions that we normally were doing every year less valuable, right? They're less valuable because you're not actually getting a benefit for them. So, for example, to give you a concrete example, if you are writing a check to a charity every month, whether it's your church or a local organization or an international organization, doesn't matter, and you were planning on itemizing that, you should check whether that's actually even doing anything for you tax wise. Now, it's great that you're giving it. I'm not telling you to stop giving it just because you're not getting a tax deduction. But maybe there should be a conversation between us, you and me, about how to get the most bang for your buck for charitable donations. For example, if you're over 70, you can donate directly out of your IRA. And that is a different system than this, so you can still get a tax benefit for that. So little things like that really do add up. And what you all need to know is whatever your income for the year is, if you're a married couple, just subtract 30,000 right off the top because that's what your standard deduction for 2025 will be. And again, that's for tax year 2025. So, what happened to retirement contributions? Well, I'm going to get to the actual maximums here in a second, but before the year ends, can you contribute any more than you already have? And are you in a position to? If you're still working, do you have any room yet before you've maxed out your 401k, 457, 403b retirement account? Most of you probably do because the contribution limits for those are quite high. So, hey, if you get a Christmas bonus, if there's just a little extra money laying around and you want to reduce your taxes as well, because remember, every dollar contributed doesn't go on your taxes for that year, it takes out a dollar of income. Uh, that's a great thing to think about doing. We can help you figure that out, whether you have room to go or whether you could make that work. And I get calls this time of year with people saying, hey, I'm looking at, I did what you said. I looked at my income for the year and I'm trying to find a way to save a little bit more on taxes. I think I'm really going to get whacked this year by taxes. And my first question to you is going to be, do we have any more room to save in a retirement account? And if so, you got the cash to pull that off? Because if you do, that can help you reduce your taxes for the year. Um, for those of you who are retired, by the way, even if you work a little dinky part-time job or it was essentially volunteer, but you actually got paid a little bit. If you have earned income, you can contribute to a retirement account, an IRA or a Roth IRA, even if it's just a little piddly amount. So if you have that and you're like, well, I'd love to save more if I could, but I retired and I'm not allowed to save anymore, blah, blah, blah. Well, actually, if you work even a small part-time job, you are eligible. It's called earned income, makes you eligible, and that's income from a job. And if you had that and you haven't thought about this before, let's talk about it because you will be eligible to save then in 2024. And maybe that can even help you reduce your taxes for the year. Now, 2025, let me get out of the way here a little bit. Um, the two main types of contribution limits that we want to be aware of are for retirement accounts through work, which 401k, but that's also 403b and 457. All those rules are the same between the three of them, and IRAs. Now, again, tax rules between those very similar, but contribution limits very different. Okay. Retirement plans through work have much higher contribution limits. And that's why when people ask me, hey, my kid just started out at a job and they want to get started saving, and can they just open an IRA with you? And the answer is, well, yeah, they can, but do they have access to a 401k through work? Because if they do, it's the same tax benefit, but you get a much higher contribution limit. And they may not be anywhere near the limit to start with, but you might as well just start there, is kind of my opinion. And again, varies case by case. But just so you know, a lot of people don't actually know this. If you are working with a retirement plan through work, no matter what age you are, your maximum contribution is at least $23,500 in 2025. You can see where it was in 24, right next to that. Okay. $23,000, that's a lot. Very few people are actually able to max out their 401ks, 457s, 403bs every year. Okay. So don't feel bad if you're not. That's the first thing. But that's a pretty high number. If you're over 50, you get an extra $7,500 to contribute. So that's for anybody over 50. It just matters what age you are. So now that maximum is up to 30,000. Actually, next year it'll be 31,000, right? This year was 30,500. That's even more money. That's very few people get close to touching that. And this year, this coming year, 2025, it kicks in a new, if you are between the ages of 60 and 63, you get an extra, 3750 on top of the 7,500. So it's not these three, underlying numbers added together. It's if you're 60 to 63, instead of an extra 7,500, you can contribute an extra 11,250. That means with regular contributions, your maximum, if you're age 60 next year, would be $34,750. That's your maximum contribution. That's a lot of room. Very few people are going to be able to max that out. at least of the people I work with. Of course, there's people who max out their 401k every year, and if that's you, fantastic. But don't feel bad if it's not you. Just know we've got some room to work with, and that could help us on our taxes at the end of the year, besides just helping us save for retirement. And then by comparison, the IRA and Roth IRA contribution limits are the same for them, by the way. And the contribution limits are lower, and there are various reasons for that. And for our purposes, we don't need to get into why that is. We just need to know that this is how it is. So if you are under age 50, your maximum IRA contribution is at 7,000 next year, and it was 7,000 this year. They actually didn't up it between years here like they did for 401k plans. Some years they up it, some years they don't. It's just what they decide to do. It's not up to me, unfortunately. I would just index it to inflation, but that just makes too much sense. If you're over 50, you get an extra $1,000. So that's why if you're over 50 and you're like, oh, I thought it was 8,000, it is. It is for you. So again, if you've got any earned income for 2024, let us know because you may be eligible to contribute to the account that you built up through your working years. And because you had a little bit of income coming your way, or your spouse had income, I didn't mention that. If your spouse is still working, and you file joint taxes, that's the key. Spouse working, joint taxes. Even if you're not working, you could still be eligible to contribute to your IRA, and it could help you reduce some taxes. So again, this stuff often gets overlooked, and we talk about it at tax time in the spring, and then it's too late to have done anything about it. So think about that now. And again, absolutely open if you want to just run, hey, Anthony, I'm not sure if that really applies to me. Can you tell me whether it does based on this fact for my life, blah, blah, blah? Yeah, absolutely. It'll take me 5 minutes to figure that out for you. So don't hesitate to reach out with those questions. Investment review. This has been a slightly choppier time for the market since the election. That has something to do with the election. It also just has something to do with the market and how it was going to go anyway. But if you feel like you need a review, it's time to get in touch with me. If you haven't talked to me in a while, now some of you on this call, we've talked fairly recently. And if we've talked within the last couple months, maybe even a little bit longer than that, my feelings about the market really haven't changed all that much. We are starting to look more ahead towards next year. And I can give you a little crash course in what I'm thinking about going ahead. But if we've talked recently, I may not have brand new info for you, right? I may not feel differently than I felt before. But by no means would I ever be upset from somebody saying, hey, look, I know we talked last month. I'm just looking at some of these headlines, or, I'm just thinking about things, and I want to hear you say what you're thinking again. Absolutely. That's what I'm here for. You don't have to just wait for me or Aaron or Margie to ping you and bug you to come sit down with me. We will do that. I know some of you have gotten bugged this fall, but that's because we want to talk to you. If you want to talk to us, don't ever hesitate to pick up the phone and give me a call. I'm happy to dig in and tell you exactly what we're thinking. And especially going into next year, I think some of these little short, hey, how you doing? Hey, what do you think about the markets? What are you seeing, Anthony? Anything we need to be doing different? I think those calls are going to be more important because next year I anticipate being a choppier year than this year has been. That doesn't mean I think it's going to be a bad year. Right now we don't. Right now we think probably still a good year. Maybe not as good as this year, but definitely choppier is what our expectation is. And choppy, by that I mean there'll be some ups and there will be some downs. And we need to know that you're in a good place. I need to know that you're comfortable with where you're at. And I'm going to do my job to explain where you're at and how it will react to certain scenarios and all that stuff that we've talked about. But my job is to keep you as informed as you want to be, but also put you in the exact right position, if possible. And sometimes that's a little more of an art than a science, but try to put you in the exact right position for you in terms of risk, in terms of your exposure to the markets, in terms of what we actually see coming up ahead. And again, to put it in brief, we do see good things for the markets and the economy next year. But I would not be shocked at all if anybody on this call, including myself, looks at a statement next year and you pull up the piece of paper and you go, oh, okay. That kind of stung a little bit that quarter. That's probably going to happen next year. And again, does not mean that next year will end up being a bad year. But talk with me ahead of time about that. I can give you a sense of how risky you are, how exposed you are to the markets, why we are as exposed as we are to the markets. So again, you'll have all my contact info at the very end of this. Most of you probably have it already. You can go to our website. You can Google Stein Financial Group to get there. You can find one of our old emails. You can give us a call. Set up a time if you're curious about this and saying, I would like to hear your thoughts a little bit, especially as it pertains to me, Anthony. That is one of the best year-end checklist items that anybody can do. Seriously. So don't hesitate to reach out and talk to me. By the way, if something were to come up where I'm like, okay, from our end, we need to react, I'm seeing something, we will proactively reach out to you. So it's not all about you. What I'm saying is, if it would give you more peace of mind to talk with me one-on-one about it, that's what I'm here for. So don't ever hesitate to do that. Social Security. So you hear about the COLA, which is the cost of living adjustment. Whenever it comes out, the news usually talks about it because what it affects is your Social Security check. And this is supposed to be more or less the inflation bonus that you get every year. Meaning, as inflation creeps up, they want to keep adjusting your Social Security so that you don't gradually lose purchasing power over time. Now, it's never perfect, and there doesn't always have to be a COLA. I've gotten into arguments with people about that before because not to get into the minutia, but by the statute, it's like, well, there is a COLA every year. Yeah, there has to be, but sometimes it can be zero. So in essence, there really wasn't that year, was it? It happened a few years ago where they didn't increase it at all. So my point with this slide is everybody who's on Social Security is getting a 2.5% bump this year. For the average person, that's about $49 a month. Now, if your benefit's bigger than average, it's going to be more per month for you, right? Because percentage of a bigger number is a bigger number. If your benefit is less than average, you're going to get less than $49 a month bonus. That's just, again, how the numbers work. It will take effect automatically in January. And here's one sneaky fact about the COLA, the cost of living adjustment, that a lot of people don't know. If you are Social Security age, meaning 62 to 70, even if you haven't taken Social Security, you still get the COLA on your benefit. So we had this a couple years ago. I think it was 21, I want to say. Maybe it was 2022, where the COLA was like 8%. And I had people calling, hey, do I need to file for Social Security? Because that I'd take 8% right off the top. Yeah. And I said, well, actually, because you're already of age, you get that even if you haven't filed yet. Your benefit will still increase by it. So don't let that be the reason. Oh, I got to get this COLA. I got to apply so I get this COLA. No, if you're of age, you get the COLA anyway. So a lot of people don't know that. Big topic, debt. I talk with people about debt all the time, right? And I'm not a loan officer. I don't work at a bank, obviously, but I can give you some tips that usually a bank won't give you about debt. And this might sound obvious to people, but the number one thing you should think about with debt is not necessarily I should have zero debt. Okay. There are people out there, the Dave Ramsey's of the world, for example. I don't really watch a lot of Dave Ramsey. I think he has a lot of good stuff to say, so I'm not against Dave Ramsey. But I know I've seen clips of him saying, I don't believe anybody should have any debt. And I don't agree with that. Okay. I think debt can be a really useful tool. However, where debt can get us in trouble, and we all know this, is when we're racking up huge amounts of interest. And usually that would come through credit cards. So when we're thinking about paying off debt, what we need to think about is what debt is costing me the most, not what the biggest balance is of debt, right? That's usually like our mortgage. That's our biggest balance. So a lot of times that one draws in our attention, right? Because, oh, that's the biggest balance. So if I chip away at that, I'll have, less debt relative. And that's not the way to do it. The way to do it is to say, what debt is costing me the most? Identify the debt with the highest interest rate. Now, 99 times out of 100, if you have credit card debt that's rolling over month to month, so interest is being charged, that's going to be your highest interest debt. I mean, we're talking 20+% for a lot of people, or high teens. Again, cards are different. Anything above 10% interest is a let's pay it off as soon as possible kind of debt, in my opinion. And then think about obviously where we're going to get the money from. And this is something I can help you with. So there are two different types of people in my experience. There are people who say, I don't want to have any debt. I will take out any amount of money, Anthony, from my retirement account to pay off debt as it accumulates. I can't handle having debt. And for those people, first off, I'm very sensitive to that. So if that's just personally how you like to live your life, good for you. That's what you should do. But I do have conversations with that type of person saying, yeah, but that is your mortgage and you have a 3% interest rate and you're making, 7% a year in your account. You're actually coming out ahead there. Maybe we shouldn't pay that off all at once. Okay. And then there's the other type of person where they walk in and there is a lot of debt and they say, I'm trying to get this debt. I'm trying to get out from under this debt, but my monthly cash flow, I can only pay off this amount every month. And it's going to take me forever to get out from under this. And then I say, yeah, but why don't we just use your retirement assets? And they said, you mean I should take out money from my savings to pay the debt? And I say, well, yeah, absolutely. If it's credit card debt and you're paying 18% a year on that debt, absolutely we should take out money from your retirement account. I don't think I'm going to make it 18% in the next year, right? Hey, I'd love to, but I just don't think that's going to be a realistic number we can hit most years. So let's just pay it off. Let's just get it done with. And as I was giving those two examples, you probably identified with one and thought the other one was, whoa, those people are weird, right? And hey, to each their own, right? I'm not saying one is better than the other. But the point is, you've got to talk to somebody like me who has seen all sides of that to give you the perspective that you may not have naturally. So, in short, when we're thinking about debt, what is the interest rate you are being charged? What is that debt costing you? And if it's costing you a lot, we need to pay it off sooner. If it's only costing you a little, we may want to pay it off later. And we can kind of work on that one-on-one as is needed. Insurance. Okay. I forget about it all. There's a million types of insurance: health insurance, life insurance, long-term care insurance, car insurance, home insurance, right? A million different kinds. I want you to ask yourself two questions because insurance is all about risk. It's all about protection, right? And the question you should ask yourself fundamentally, and you can branch out from this, but the two questions are, if something happened to me today, meaning that's a nice way of saying if I got hit by a bus today, would my family and loved ones be financially able to deal with my absence? Okay. It's a deceptively complicated question, right? Because what would happen? Where would money come from? How would they support themselves? If you're still working, how would they replace your income? If you're retired, what happens to your assets, right? Who do you have for beneficiaries? All that stuff. And if the answer is, well, they might have a tough time dealing with my absence if that were to happen, then we might have an insurance need. Okay. Then we might have a reason to start thinking about insurance. The second question, and by the way, that would be life insurance primarily, although there are other ways to think about that too, disability, all that stuff. We don't have to get into the details right here, right now. Second question, if I live a long, long time, longer than I expect to live, will I able to cope with the costs that inevitably arise from aging? Okay. Now, I'll be the first to tell you, generally, as you get older, your expenses will decrease. Even as healthcare becomes a bigger piece of the puzzle, your expenses will decrease. And for the very simple reason of when you're in your 80s and 90s, you're probably not as active as you were in your 60s and 70s. Okay. Now, hey, if you are, Godspeed, good for you, but in general, on average, spending tends to drop as we age. We just do less stuff, right? But our healthcare is a big variable there. And the question is, if I live till 95, A, is my money going to make it that long? And that's a question for me in terms of how your assets are set up for longevity. But also, what if I have a high level of healthcare need? Do I need to think about long-term care insurance? Do I need to think about the medical insurance that I have, or trying to set things up in a way that is a lot more sustainable for the long term? Right? These are all basic things. These are all things that I would do with you the first time we sit down and talk. Okay, how do we get your money to last through the rest of your life? That's a basic question for any financial advisor. But thinking about it in these terms is why it matters. It's not about you necessarily, it's about your family, it's about your loved ones. We need to do a good job for you so that you're not burdening them with financial hardship if you were to leave too soon, or you're not stretching finances too thin if you live, quote unquote, too long. And you might say, what's living too long, Anthony? I don't know. That's for you to decide. But those are the two questions you need to ask yourself. And if you don't, I'll ask them to you. So, that's again what my role in this conversation is. My least favorite term in all financial planning is estate planning because I just think that word comes with so much baggage. You think about an estate, oh, that's for rich people, that's not for me. Or you think of some country estate in England or something like that. Really, what it is, legacy is a better word for it. It's just, what do you want to happen to all your stuff when you're not here? That's what I would put in my book as the title of the chapter. What do you want to happen to all your stuff? Right? That's what planning for this is, right? So think about the things. Here's the tip. When was the last time you updated your will? If it was 1 to 5 years ago, you're probably totally fine. If it was 5 to 10 years ago, you're probably fine. If it was 10 plus years ago, has anything changed in your life in the last 10 years? It sure has in mine. Well, that might mean you want to take a look at it and update it. Okay. Now, there are plenty of people who have 20-year-old wills, and I talk to them about it, and they say, yeah, everything we put in there is still the way we want it. I'm like, great, then you're good. But if there's been a life change, have you moved to a different state? Different states have different rules. Has your family changed? Right? Think about the shaded part here. Do you need to add anyone to your will? A new grandchild? Did one of your kids get married and their spouse you want to add in? Mixed families, blended families, friends? Anybody you want to add? Or, as the case may be, and this usually brings up stronger emotions, anybody you want to subtract from the will? Anybody you want to take out who doesn't deserve to be there anymore? Right? That's valid too. And what ends up happening to a lot of people is they get that will done and they're like, it's done. I'm good. I feel good about it. I've got everything set up. I'm good. And then 20 years go by, they don't give it a second thought. And then they look back and they say, ooh, my life has changed pretty significantly over the last 20 years. I've got all new friends and maybe not all new friends and family, not you haven't started a new life, but I've got grandkids now. I've got great nieces and great nephews. I've built this new friend group and they've got places I want to send money to when I'm no longer here. And that's a good reason to update a will. Okay. So there's all sorts of different aspects to estate planning. There's trusts, there's wills, there's charitable donations, there's a million different levers we can pull. And we're not going to go into that. That literally would be its own hour-long presentation. I've done those in the past, actually. If you want to go look at our YouTube channel, I've done one. We've had an attorney come in and do one. Great resources. Go check out our YouTube channel, Stein Financial Group, or it's youtube.com/Stein Financial Group. If you just Google us or go to our website, you'll find it. But if we're just going to boil it down to brass tacks, think about a will. I just got our wills done, my wife and I, in the past year. If you need a good attorney, I've got a good attorney to recommend. It's the person I worked with. It's the same person I recommend to everybody we work with, and he does a great job. His name's Brad Frank. But it was simple. It was easy. And he even looked across from me and said, we can do your will, but you've got a pretty straightforward situation here as far as what you want to happen. I said, I get it. I know it's straightforward. I still want it down in writing because I think it's important. And besides wills, you've got healthcare directives and all that stuff. But anyway, think about if there's been a life change and whether that might affect what you had originally intended for your will. Okay. So I just hit a bunch of financial information. I want to spend the last couple minutes here talking about lifestyle things. Again, this is our Thanksgiving section, if you want to put it that way. Not necessarily financial, but I'm going to tell you a story real quick, and it's short. And then that'll feed into why I think this is important. Because again, I see people retire all the time. And while there's an incredibly diverse array of experiences around retirement, and no one person retires like any other person 100%, there are some commonalities. Okay. And I was recently watching a snippet from a talk. I think it was like a panel discussion. It was with the I don't know what his title is. It's the author, influencer, not in the new social media way, but his name is Simon Sinek. You've probably seen a clip with him before. Maybe you have, maybe you haven't. He's got glasses, kind of works at, he's a business person, but he's also he's written some books and he's a motivational speaker, maybe is how you would think of him in the old school way of putting that. But anyway, he was on this panel and he said, I recently saw a study about the three most impactful organs in the human body for longevity. And this is him saying it. I'm not a doctor. It seems good enough to me to repeat to you. The first one was the heart. Pretty obvious. That's what gets the blood and the oxygen going throughout all your system, right? It's pretty straightforward. The number two is your lungs, right? If you got good lungs, you can get a lot of oxygen in, you're going to be able to live a longer time. Two obvious ones. Number three, your thigh muscles. Okay. Thigh muscles. Why would that be? Well, I personally don't think there's any correlation between somebody's thigh muscles and, not getting diseases or things like that. That seems pretty stretch. But what he said is what I think makes sense. He said, your thighs are important because they're what bring you places, bring you to people, bring you to experiences, let you experience life. And what lets you be mobile, right? Move around the house, not just be bed bound or chair bound. Um, it's what allows you to see the people you care about moving. And that's what I think a successful retirement should be for people. It's yes, I want you to have the money to be able to do the things you want to do. Yes, I want you to be able to buy the car or remodel the house or buy the new house or whatever your goal is. But number one, I want you to be able to do the things and see the people that you care about. And that is why it's not just about money. It's not just about money. It's about your life and how the money can help you do those things. So for health and wellness, I'm no doctor, but it's the end of the year. Do you have any health benefits that you could use up before the end of the year? Right? Do you have, oh, I hit my deductible this year on my insurance, so that means I can go do this and I'm not going to be charged for it. Or, oh, I had this benefit for an extra session of whatever. Again, everybody's going to be different. But are there any benefits you can use up? Think about that. Would it improve your life? I'm not saying just go do it just to do it because, well, Anthony told me to go do this, so I guess I'll just waste an afternoon and go do it. No, but would there be something that would enhance your life? Could you plan a new routine? Could you help budget for wellness better? Hey, I was just talking to somebody yesterday, without giving personal details, but literally yesterday, they have a friend who's dealing with a health issue, and the health issue has harmed their immune system. Again, without going into details. And this person I was talking to, this client said, I gifted that friend a membership to a 24-hour gym because I know how important it is for them to be able to stay strong and maintain their strength, thigh muscles, to that example. But I wanted them to be able to go at times when there weren't a lot of other people there so they didn't have to worry about getting sick. That's a great thing. Yeah, it costs a little bit of money, but think about the benefit that that's going to have for somebody's life, the friend in this case. Um, let's find a way to use your money for things like that, is the point. Home organization. It's winter in Minnesota. That means we're all going to be shut up inside a little bit more than normal. And that means if you're my wife, for example, all the projects that are sitting around the house are now just like red alarms blaring. And you're saying, I can't look at this anymore. I can't look at this anymore. And I've talked with a lot of people who've told me this, and they've said, well, yeah, we're working on some home stuff this year, but God, it feels overwhelming. And I give them the same advice, and I'm no home remodel or home project expert, but I give you the same advice I give to people after a loved one dies, which is it feels like this is just such a big project, Anthony. How am I ever going to do this? And I say, do it one bite at a time. How do you eat the elephant? One bite at a time. Just do it in chunks. Don't feel bad that you're not getting it all done on one weekend. Okay. Now, some of you may be that type of person. That's fine. That's who you are. But try to think about how you can organize things in a way that makes sense for your life and doesn't just bog you down with this project that weighs on you psychologically. Again, it's less about, from my perspective, the project itself. That's up to you what you want to do. But I've seen people walk into my office and just you can sense the weight on them. And whether it's going through the home or dealing with the death of a loved one or just some big weight on their shoulders, try to break it into chunks because it's going to make you happier in the long run. And I want everybody on this call to be happy in the long run. Hobbies and travel. All right. Now, I hope I don't need to tell you all to have a hobby or if traveling is your hobby or finding something. But for a New Year's resolution, let's say, because we're coming up on the end of the year, write down something that you love to do, and then how could you do more of it? Block off some time for it. Will it cost you a little bit of money? Let's talk to me about how we can afford to do that. Because let me tell you, it would be the best call of my week or my month if I got a call, or every day. I would love to get this call. Somebody said, Anthony, I went to that presentation. I heard what you said, and I've got a new hobby I want to start. And the only downside, it's going to cost me this much a month. Everybody's situation is different. I'm going to say, oh my God, that's fantastic. I love getting this call. When do you need the money by? That's exactly what you should be using your money for. And I say this, some of you might be, oh, you need to tell me to have fun, Anthony? Great. You're not my financial advisor for fun. I just want to make sure I'm doing okay. No, I genuinely believe me when I tell you this. There are people I work with who I try to coax into spending more money. Say, what do you want to do? What would make you excited? What would make you happy? Is there anything you could do, an experience, a hobby, something with the house? Let's do it. Let's find a way to do it. You've got the money. Let's do it. That's a good mindset to have in some ways because it's allowed you to save all these years if you're a really good saver. But don't let it poison your retirement in terms of you're not actually living the life that you could be living. I'm not saying be wasteful. I'm not saying just blow all your money as soon as you possibly can, but do things that make a difference for you. And we can find a way to make the money work for that experience. So I'll get off my soapbox here. Actually, there's one more relationship. So this is corollary to the last one. Find somebody, a friend or family member you haven't seen in a while, and just put in a call to them. Again, just on a psychological level, everybody who has retired, retirement for some people can be very isolating. I see it. Do things that make you want to get out there and see people. Do hobbies, find people you want to talk to, and just hang out with them. I was just watching a if you know who James Carville is, the political analyst or whatever. There's a new documentary out about him, and he's an interesting character, so it's a funny guy. But then when they're documenting him, I guess with their cameras, he wakes up every day and just sits on the phone all day. He lays back on his couch, he's got a headset on, and he just talks to people all day. Now he's talking about all sorts of stuff. He's talking about politics, he's talking about life, he's blah blah blah. But there are people who have said, I talk to him every day for the last 5 years, right? That might be extreme. That would be extreme for me. I'm not advocating you need to spend 8 hours a day on the phone with people. Most of us don't have time for that. But I think he's doing something right, which is he's not going to have trouble keeping relationships up as he gets older. Okay, as he already is. I think he's 80 now. So use that as your example. How can you connect with people more? Don't let a retirement isolate you. Allow it to give you more time to spend with the people you care about. All right. Thank you, everybody. Well, we're ending a little bit before the top of the hour, so I really appreciate everybody who's been here. I hope the first part of this gave you some good information about things that you can start thinking about, things that you can do in preparing for taxes, trying to get a little bit more savings in this year, thinking ahead and thinking back. But then I hope this last part, this is just culled from my experience, okay, from all of our experiences. And I just happen to see a lot more retired people than the average person does. So I've got this diverse background to be able to share with you. And those four things that I just went through, those are the most important parts of a good retirement. The money is important, but that other stuff, the relationships, the hobbies, the time, that's the most important part. The health is the fourth one. All right. Well, if any questions did come up or you want to go one-on-one with any of it, you've got our contact information right on the screen here. Feel free to just copy that down. And hopefully you've got it in other ways too, like we've emailed you and all that stuff. But feel free to reach out. But thank you everybody for being here. And again, I hope you all had a wonderful Thanksgiving and happy holidays and a happy new year. And we'll see you probably next year for our next event here. Thanks, everybody.